Hi traders, Nathan Bray here from ACY Securities. Well, I want to chat to you today about oil. Big headlines coming out this week around the world. But at the same time, I want to look at this idea of comparing using emotional trading decisions and also using your facts, your logic and your evidence, okay, in your trading decision. Great example this week. Headlines around the world suggesting that oil prices could go higher or could be supported because Saudi and OPEC countries are going to reduce supply. So it's very fearful. It's like they're purposely reducing their supply as a way of getting oil prices to go back higher, which they want for their own benefit. So what I want to look at now are some facts to say, well, maybe they're reducing supply for a particular reason. Okay, that makes a lot of sense. And maybe oil prices might be continuing to fall rather than shooting up and costing people more at the petrol bowser, which is that fear-based headline that we're getting. So what I want to look at is, what if global economies are contracting? What if the amount of stuff, goods and services is actually decreasing, and therefore Saudis are doing the right thing in that they'll need less oil to produce less stuff. So reducing supply makes a lot of sense. So the tool I want to look at in FinLogic, it takes you 2 minutes. Let's have a quick look at a very basic view. So let's look at GDP around the big manufacturing economies around the world. Okay, so let's start even here in Australia a couple of hours ago. So according to FinLogic, the data came out over the last few quarters. Australia has gone from 0.9% growth all the way down to a couple of hours ago to 0.2%. So Australia's need for oil is definitely contracting if you compare it to their goods and services that they're producing. All right, let's take a look at the euro. The euro quarter by quarter has gone down from 0.7% all the way down to 0.1%, a massive contraction. If we look at the US, 2.6% down to 1.1%. Across to Japan, Japan is zero, folks. 0% growth in their GDP, and the UK is 0.1%. So looking around the world, I think it's fair to say, based on the facts, the logic and the evidence, is that we're seeing a contraction in the amount of goods and services created, and we could be moving into further recessionary environments in the major economies around the world. So what could that mean? That could mean less oil. Therefore, the headline, it might be very emotional, but it may be actually incorrect in that the Saudis and OPEC might be doing the right thing because there isn't the demand there used to be for oil, so they're providing less on the supply side. These things, folks, are imperative when you're trading. So making sure, rather than just reading an emotional headline, you stick to your trading strategy. So looking at facts, logic, and evidence. The other thing you can look at, we'll finish off with, is price. Right now, I'm looking at West Texas oil, and I'm looking at the fact that it's stuck inside a range in a downtrend. So I'm looking at the top of the range, about $73. And the bottom of the range at the moment is about 66. So after this announcement came out and the suggestion was oil price were going to go up because they're reducing supply, we've actually seen the oil price fall over the last few days. So from a technical perspective, I would still be going in line with the technical trend and looking at that $73 level as a point of resistance. Sure, if we get a break above that, then fine. We could be seeing a change of trend, but we could also be looking at this lower 66 level as support holding. If we get a break below that, folks, we could see this trend continuing on the downside. So combine your facts, combine your logic, and combine your evidence, and keep your price action in check and let go of all this emotional trading. That's all from me. Have yourself a great trading week.